Hey, good morning, traders. So, first of all, like the video if you like it, if you get a chance. Retweet me on Twitter if you get a chance. Some company 9662C. I haven't done a video for a while. Make it really quick and simple here, guys. I got my levels, targets, and stuff on my chart here. So basically, what we've been seeing is some low volume sell off throughout the course of the day, taking it slower in the markets, just like yesterday. Happened Friday as well. And then there's just enough orders out there to give us a short squeeze into the close. Relief rally short squeeze. But look at the amplitude of this rally the first day of the year. So to be mindful of that, we had some bargain hunters, some money sitting on the sideline looking, to buy the dip, and they're trying to buy this dip. So it seems like into the uh, late afternoon session. So be mindful of that, a pattern that is developing here. So we have a gap up this morning. If that pattern does play out, we're probably going to fill the gap like we have been. Target one's probably going to satisfy. Don't know about target two. Target one is likely to satisfy. So I'm looking for that here early on in the session today. We're coming down. We might even do it here. Like I said, we might even come down to this before the market even opens. So those are a couple of scenarios I got going on here. So we had based off of, so to start the year here, I got my fizz based off of how we started the year now, because it's also the week, because we've only got one day of value here. So that's why my ranges are just based off of what we've got going on so far this year. And one way to get these targets here, I go on a 1 hour time frame, and I look for the ATR for the 1 hour time frame, and then that gives me my measurement for target one, target twos, and gives me some idea of what we might be in store in the current session. Okay, based off of yesterday's price action. Okay, and the news flow today is probably, we do have the Fed minutes coming out later on today. And remember, the reaction to the Fed on the news last time was a really bullish response to the Fed meeting last time. We're just getting the details of that Fed thing, so you have to be careful. Not for sure how far we can come down here going into that. A lot there is historical um, uh, a feel there that people don't may not want to be too short going into that information today. So be mindful of that in today's session. So yeah, so looking for target one to hit first, and then we'll go from there. That's all I can say on that. Then what I do have going on here, uh, we were trying to push out above this lower consolidation range. It triggered around 10:45 yesterday. Initially here, we are rejecting that. So I anchored my Fibonacci's off that. And so if we were to break above yesterday morning, see, yesterday morning we did open a lot higher. We gapped up really high from the weekend, and we opened in a higher price position, which got rejected hard. Okay, so far this morning we are continuing to reject this higher distribution. So what, like I said, I'm looking for the gap fill initially, and then ideally what you would be looking for is trying to accept prices above this overnight high. So so definitely that's a main thesis we got going on here for the bull camp versus the bear camp. Now I do want to point out we really did a lot of damage to the bull case yesterday with this big sell down. So in the count, a late wave count, which I currently am stalking, we are in a bearish count with a possible 3 of 3 uh, or a possible possible wave 3 scenario to the downside. So if that's the case, this right here was wave one, three of one, 3 of 2, and we might be coming into today for wave 3 of 3, which is the most violent of the downside wave. So be mindful of that in your trading today. Okay, and that goes very similar, exact same scenario for the Nasdaq as well. Okay, so we got the NQs. We'll put that up real quick. Okay, like I said, 301, 302, possibly setting up for a 303 to the downside. If that's the case, these lows will not hold. It'll blow right through it. Uh, so we want to definitely keep that in mind here, that we could be actually blowing right through yearly lows so to date here, okay, and getting a little bit ugly, you know. So be very mindful of that scenario, that we could be and the thing is, since we're starting a new year here, a lot the supports that we've been playing with off of last year are not nearly as relevant, because we started a new calendar year. So be mindful of that too. The having that cross in the calendar year, it really messes with the supports and resistance areas. They don't tend to be near, they're less relevant than what they were last week. Okay, so be mindful of that as well. Okay, and go back over here, 15-minute. There you go. And so we're coming down here. They're having trouble. All this overhead inventory here, they just cannot seem to hold above that. And I think they're catching on that they're selling off and trying to support prices into the afternoon. So that suggests to me we will probably have an early sell-off today. So diamonds, similar situation. They are holding out just a little bit better so far. We're holding above that consolidation for our diamonds. And then the Russell's holding out the best. Okay. Similar situation. Depending on how you... No, I don't know about that. These right here probably should have been higher. Yeah, see how this came up higher here? Yeah, activate. Let me change this real quick. To really have that line up with what the other indices were doing, you're probably looking right about like that for your fibs there, okay, on the Russell. Okay, Russell did not bounce nearly as high, so this is actually doing the worst. Okay, base versus yesterday's price action. Okay, so just keep that in mind here. I think these are probably still relevant targets. So I'll just keep these targets on here. Okay, and but yeah, the fibs, the Russell does seem to be, because it did not get that you didn't get that really nice bounce that you got to see in some of the other indices. Okay. Okay, that's all I got to say here. Please, leave comments below if you see something that I don't see here, and we'll go from there.